Hello everyone and welcome to the market opening bell for Tuesday, February 10, your 10-minute guide to the stock market. Hong Kong stocks followed the positive performance of overseas markets on Monday. The Hang Seng Index opened higher by 422 points, climbed as much as 551 points during the midday session to reach an intraday high of 27,111 points, and ultimately closed up 467 points or 1.8% at 27,027 points. The China Enterprises Index rose 136 points or 1.5% to close at 9,168 points, while the Hang Seng Tech Index gained 71 points or 1.3% to finish at 5,417 points. Total market turnover for the day reached HK dollar 255.1 billion. Southbound funds recorded a net outflow of HK dollar 1.886 billion from Hong Kong stocks. Technically, the Hang Seng Index reclaimed the 20-day moving average line at 26,931 points, but remains capped by resistance at the 10-day line of 27,123 points. If it can break through the 10-day line and stabilize above it, the next target would be to fill the downward gap from last Monday, which spans 284 points between 27,384 points and 27,100 points. The three major A-share indices opened higher and continued to rise, posting gains ranging from about 1% to 3%. The Shanghai Composite Index closed up 57 points, or 1.4%, at 4,123 points. The Shenzhen Component Index finished near its daily high, up 301 points, or 2.2%, at 14,208 points. The Chinex Index rose 96 points, or 3%, to 3,332 points, with combined turnover in Shanghai and Shenzhen reaching 22,497 billion yuan. The central parity rate of the renminbi against the US dollar was raised by 67 pips day on day to 6.9523 per US dollar. Chinese President Xi Jinping inspected science and technology innovation work in Beijing, where he viewed displays of representative technological innovation achievements and engaged in cordial exchanges with scientific researchers and representatives from technology companies. AI-related semi-new stocks were in favor, with MINIMAX 00100 surging 11.7% and Zhipu 02513 soaring 36.2%. MINIMAX launched its agent desktop, and its M1 and M2 reasoning models have achieved leading performance while gaining extremely high download volumes and paying user support in overseas markets, such as the Talkie app. Zhipu released GLM 4.5, along with the latest GLM 5, achieving native integration of reasoning, coding, and agent interaction, with its open source models also ranking among the world's top performers. Insurance stocks rose, with China Life 02628 recently receiving further share purchases from China Ping N 02318, pushing China Life and China Ping AN up 4% and 4.9% respectively. In recent times, China Ping An, particularly through Ping An Asset Management, has frequently increased its holdings in China Life and other peer insurance stocks. As of early February 2026, China Ping An's stake in China Life's H shares had risen to 10.12%, once again triggering mandatory disclosure requirements. In a low interest rate environment, insurance funds face pressure from rigid liability side costs. Large financial stocks like China Life are viewed as alternative dividend assets, offering stable cash dividends that provide yields superior to the 10-year government bond rate of around 1.7%, aligning with insurers' goals of seeking long-term stable returns. Under new accounting standards, insurance companies need to improve asset liability linkage efficiency. Increasing holdings in large-scale, highly stable premium financial assets helps Ping An Asset Management build high dividend portfolios to match long-term insurance liabilities. At the start of 2026, bancassurance channels in the life insurance sector show strong performance, with first-year premium growth up 34% year-on-year. Ping An's move is also seen as reflecting optimism about the overall recovery and long-term allocation value in the domestic insurance sector. Compared to A-shares, the H-share financial sector has long traded at a discount, offering higher safety margins and room for medium to long-term recovery. Automotive stocks perform well. According to information obtained by domestic media from BYD's 01211 Investor Relations Department, the company is pursuing a multi-route strategy in the solid-state battery field, with sulfide solid-state batteries as a key technical direction. Breakthroughs have already been achieved in battery lifespan and fast charging capabilities, with small batch production expected as early as 2027. Reports indicate that BYD plans to launch batch demonstration vehicle applications for full solid-state batteries around 2027, with large-scale commercial applications targeted after 2030. In the sodium battery area, BYD has entered the development stage of its third-generation product technology platform and has developed sodium battery products capable of 10,000 cycles, though mass production timelines will depend on actual market and customer demand. NIO 09866 founder, chairman, and CEO William Li posted on social media that in 2026, NIO plans to build 1,000 new battery swap stations and expand the power swap scenic routes to 100 lines. Following the completion last year of the G318 Sichuan-Tibet and Yunnan-Tibet swap routes, this year will see the opening of the Silk Road swap route, continuously expanding users' travel boundaries. Additionally, large-scale construction of the fifth-generation battery swap stations is set to begin this year, allowing Firefly users to soon enjoy convenient battery swapping experiences. Xiaomi Group 01810 submitted registration for its new YU7 GT model to the Ministry of Industry and Information Technology on February 6. This model boasts over 1,000 horsepower and a top speed of 300 km per hour. It is expected to officially launch in mid-2026 with a starting price of approximately RMB 400,000 to 500,000. The closest comparable model is the Tesla Model Y Performance, priced at RMB 350,000 to 418,000. Analysts believe that the YU7 GT outperforms it in body size, performance, and range. PopMart 09992 rose 5.7%. On the news front, PopMart founder Wong recently announced key 2025 data at the company's annual meeting. Over 10,000 global employees and partners, more than 100 million registered members, LABUBU sales exceeding 100 million units for the year, total full category and full IP product sales surpassing 400 million units, business coverage in over 100 countries and regions, more than 700 global stores, and 6 major supply chain bases. HKT 06823 announced its annual results for the year ended the 31st of December 2025, with profit attributable to holders of share stapled units increasing 4%. Basic earnings per share stapled unit stood at HK dollar 0.6976, with a final distribution of HK dollar 0.4797 per unit and a full year total distribution of HK dollar 0.8177. Several key financial indicators show growth during the period, including total revenue up 5% to HK dollar 36.553 billion, EBITDA rising 4% to HK dollar 14.234 billion, and adjusted cash flow also increasing 4% to HK dollar 6.199 billion. Two new stocks are listing today. The world's largest fishing equipment manufacturer, Rich Outdoor 02720, closed at HK dollar 24.6 inches. The pre-listing gray market on Philip Mart yesterday, representing a 100.8% or HK $12.35 premium over the listing price. Excluding fees, a bought lot of 500 shares would yield a paper profit of HK $6,175. AI inference SoC supplier Extra Semiconductor 00600 closed at HK $27 inches. The gray market down HK $1.2 or 4.26% from the offer price. Excluding fees, a bought lot of 100 shares would show a paper loss of HK $120. Driven by tech stocks, US stocks rose on Monday, with the fear gauge VIX index falling 0.4 points or 2.3% to 17.4. The Nasdaq climbed 207 points or 0.9% to 23,238 points. The Dow hit a new high of 50,219 points intraday before closing up 20 points at 50,135 points, setting a new closing record. The S&P 500 rose 32 points, or 0.5% to 6,964 points. The Nasdaq China Golden Dragon Index, reflecting Chinese concept stocks, gained 9 points, or 0.1%, to close at 7,817 points. NVIDIA, NVDA, US and Broadcom AVGO. US rose 2.5% and 3.3% respectively. Microsoft, MSFT. US gained over 3%. Meta, META, US climbed 2.4% and Oracle, ORCL, US surged 9.6%. Alphabet, GOOG. US plans to issue an extremely rare 100-year bond, marking the first time a tech company has issued such ultra-long-term debt since the late 1990s. According to sources, the 100-year bonds will be denominated in British pounds and issued alongside 4 other pound-denominated tranches. This will also be Alphabet's first issuance of pound bonds, with pricing potentially as early as Tuesday. The last time a tech company issued 100-year bonds dates back to 1997, when Motorola sold similar debt. The 100-year bond market is currently dominated mainly by governments and universities. White House economic advisor Hassett stated that due to declining population and rising productivity, U.S. employment growth figures may fall in the coming months. The U.S. Department of Labor will release the delayed January non-farm payrolls report on Wednesday. Markets are also watching the January CPI data due on Friday, with consensus expectations for a year-on-year rise of 2.5%. Sinopec Engineering Group 2386. Sinopec Engineering Group is primarily engaged in the design and construction of refining, petrochemical, and emerging coal chemical projects. The company focuses on building a comprehensive service advantage, combining high-level front-end engineering capabilities plus low-cost project execution capabilities, with steady improvements in both the quantity and quality of market development. For the first 9 months ended the 30th of September 2025, the total value of newly signed contracts reached RMB 91.347 billion, up 24.4% from RMB 73.457 billion in the same period of 2024. As of the 30th of September 2025, the backlog of uncompleted contracts stood at RMB 215.47 billion, an increase of 24.8% compared to RMB 172.677 billion at the end of 2024. In the domestic market, the group maintains strong overall competitiveness. While consolidating its core strengths in traditional businesses, it continues to expand into strategic emerging areas such as new technologies, new materials, and new energy. In the first half of 2025, the group signed 197 new contracts in emerging business sectors, with a total contract value of approximately RMB 7 billion. This included 35 contracts from clean energy, new energy fields worth about RMB 1.6 billion, and 162 contracts from new materials, new technologies, energy conservation, environmental protection, and other emerging areas worth about RMB 5.4 billion. In the overseas market, the group has intensified collaborations with international peers, strengthened high-level visits and promotional exchanges with strategic clients, and continued to strengthen, expand, and optimize its overseas market presence. Notable newly signed overseas contracts include UAE Not Going to Lie project, FEED plus convertible EPC, Vietnam Biomass Gasification to Sustainable Aviation Fuel SAF Project Feasibility Study Contract. Algeria Hassett Refinery Project EPC General Contracting Contract. Kazakhstan Seleno Petrochemical Complex Polyethylene and Utilities Project EPC General Contracting Contract. The transformation and upgrading of China's domestic energy and chemical industry is accelerating, with deepening industrial chain extensions. Trends such as oil to chemicals, oil to specialty products, and high-end development provide strong support for the group's core domestic market. Meanwhile, new growth drivers continue to emerge from paths like CCUS, carbon capture, utilization, and storage, zero carbon energy substitution, upgrading of old equipment, and green, low carbon technological innovation. Globally, the Middle East Gulf region remains the largest market for oil and gas and refining capacity expansion. Central Asia shows strong complementarity with China in capacity, capital, and engineering technology, with increasingly active investments in petrochemicals and natural gas chemicals. Southeast Asia's rapid economic growth drives expanded demand for refined oil products, natural gas, and chemicals. Economic development and industrialization in Africa and Latin America offer significant market potential. Recommended buy price HK $7.5, target HK $8.4, stop loss HK $7.1.